Sure. So the last 12 months have been pretty interesting. In some respects, more of the same. A ton of capital has moved its way into the sector, represented by many of the people up here, who've all been active and active competitors of ours in many respects, as we have deployed the best part of €1 billion into new opportunities right across Europe in a series of portfolios and single asset deals. Maybe the biggest thing that hasn't happened in the last 12 months is the pace of rental growth that we anticipated. So the rental growth has been slower. We think it will come. It has come. There's been about 5% growth over the last 2 years, 3% of that in the last 12 months. So the tail of rental growth will be longer. But the good thing is cap rates have compressed much faster. So we've had cap rate compression of anything up to 100 basis points blended across Europe. And so the important thing there, on one hand, while we're not able to drive income returns as fast as we had planned and anticipated for, we are able to drive total returns. Transaction
volumes, to put some figures around that, last year were a 50% increase on the year before. So about €16.5 billion worth of logistics and industrial transacted. At the first half point of this year, further €8.5 billion has transacted, which is about the average total annual amount for the preceding 5 years, with the exception of 2013. So we don't see that stopping. We think that this year those volumes will exceed €16.5 billion. We don't see any slowdown in terms of the groups and numbers of parties bidding on transactions. I think the biggest difference is in terms of new entrants. There is a pool of global equity that hasn't invested directly before that is now looking to do that in a meaningful way. And that changes the dynamics in terms of capital allocation, certainly.
We've been very active this past 8 months into 2014. I think by the numbers that James mentioned, I think we've had probably a bit less than 20% of market share in terms of investment activity. We've deployed about €1.7 billion year to date. We've been looking for opportunities where we can, in the short to medium term, create value. And that's through active hands-on asset management, leasing up vacancies, regearing leases. So it's been really looking for opportunities that are accretive to the portfolio from a diversification point of view, but also where we can add value in the short to medium term. So I think the market continues to show opportunities for those who have the stomach to take on vacancy, short-term leases, work out through some difficult assets. But obviously, long-term income, credit leases are going to be highly sought after, not only by ourselves, but all the financial investors that are attending this conference.